reflects in all the work that we do for our clients. And with respect to clients, as I've reached out to them, they've come back to me with a demonstration and endorsement of how Infosys has built a partnership with them over all these years. The messages I've got back from clients show a real delight for working with Infosys and for all the work that we do for them. As we look at the market, there are exciting new opportunities that exist today in the IT services market and with our clients. Each of our clients are facing a digital disruption that their sector is involved in, that their business is involved in, and many of their competitors are driving. That creates a tremendous opportunity for us to partake in all of that digital disruption for the benefit of our clients. At Infosys, we have a strong foundation for our business. We have the trust of 1,100 clients, 200,000 passionate employees. We work across a broad range of sectors and service lines. We have a business that's growing and with high operating margins. We generate exceptional cash flow, and we have a strong balance sheet. All of that builds a strong foundation for our business. Building on the strategy refresh that Nandan initiated, I have structured a review that looks into 4 dimensions. These are the new market opportunities, our client relationships, the people dimension, and a service offering portfolio that's constantly being rejuvenated. These are the 4 critical elements of our business as we look forward. Over the next 3 months, I'm meeting with several of our clients, several of our employees, several of our partners, working with our leadership team and the board to test the assumptions in the approach and build then a comprehensive view along those 4 critical elements. In April, I plan to conclude this exercise and lay out the strategic priorities for us going forward. With a strong set of building blocks and renewed energy and attention to the digital changes in the marketplace, we have an opportunity to build a stronger Infosys in the years to come. I look forward to working with the entire team here at Infosys, all of our clients and our partners, to partake in that journey and be part of the success going forward. Thank you. And now I'll ask Praveen and then Ranga to comment on the Q3 results.
Thank you, Salil. Happy New Year. We had a very good quarter across multiple dimensions. Our revenues grew 1% sequentially on reported basis and 0.8% on constant currency. Margins remained stable at 24.3%. Revenues from new software and services increased to 11.6% as compared to 11% in the previous quarter. It's a 6.8% sequential quarter-on-quarter growth. Our revenues from digital services crossed 25%, share of revenues from digital services. Our utilization continues to be at an all-time high. Our client metrics are looking very solid. We added about 79 new clients this quarter. We have seen improvement in client numbers across multiple buckets. We had 8 large deal wins, $779 million TCV. The pipeline is very healthy. Our attrition has come down to from very high levels to about 15.8% this quarter. So net-net, a very good performance across all dimensions, considering what is typically a very soft quarter.
Thanks, Salil and Praveen. Very happy New Year to all of you. This quarter's performance of the company was resilient on multiple dimensions, whether it is revenue, profitability, cash generation, new services growth, attrition, and multiple dimensions. Coming to the operating margins, they improved sequentially from 24.2 to 24.3%. This was on the back of a broad-based improvement in several operational efficiency parameters, like utilization. We touched 84.9%, which is an all-time high. The on-site mix improved to 29%, which is 11-quarter low. Then we had reduction in the subcontractor expenses, and so on. Our cash generation was record. If you look at the first 9 months of this year, while the revenues grew 6.5%, the free cash flow grew 23%. Again, this quarter had certain significant developments. As you know, we entered into an advanced pricing agreement with the United States Revenue Service. Apart from resulting in the reversal of provisions of $225 million, it also enhances the predictability of our future tax liabilities. Next, and last but not the least, we concluded one of the largest share buyback programs in the country with 13,000 crores of share buyback. And as you know, this is in line with the commitment made by the company in its capital allocation policy that was announced in April 2017. The other important point that I would like to highlight is this quarter, for the first time, our per capita revenue crossed $53,000 per person, which is as a result of productivity improvements. If you look at the first 9 months of the year, while the headcount increased by 1%, the revenues grew by 6.5%. So with that, we will open the floor for questions.
Hi, good evening. Chandra Shrikant from ET Now. Salil, first of all, welcome and look forward to meeting you and interacting with you going forward. Just want to start by, asking you about the overall commentary. I know it's just been a few days since you joined Infosys. You also mentioned in your opening remarks that you will continue a review and, lay out a new strategy by April. But based on everything that you see, from a global perspective, from an environment demand perspective, what are the immediate challenges that you see for the company, and what brief have you been given by Nandan Nilekani, even though you cannot give us something on strategy immediately, and challenges with respect to senior management attrition? We've seen a president leaving this quarter. So, what will you do to ensure that senior management attrition is contained? Because that was an issue we saw in the last couple of years. Ranga, a couple of questions for you on pricing. We've, seen yet another quarter where pricing's improved. So, has the environment around pricing stabilized? And is there more scope to really take up utilization? Because again, at 84%, is there, more headroom to improve utilization? Praveen, just an overview of where you see sectors as well as geographies, because a lot of people are saying that, digital has reached a maturity cycle. So perhaps Indian companies stand to gain in the next couple of years. It won't just be Accenture. Thanks so much.
Let me start off. Thank you, Chandra, for the welcome. In terms of what the immediate priorities are, as I laid out, my first priority is really to connect with our people and connect with our clients and build together with them what we think is a roadmap for the future ahead. And that's what we want to lay out in this April timeframe. In terms of what Nandan has asked me to do, he's told me to get on with it and get the job done. So it's quite simple. You know him. He's very straightforward. In terms of the president leaving, let me ask Praveen to comment on it. It was for his personal reasons that Rajesh has decided to leave.
Yeah. No, I think this is something that is not new. Rajesh had indicated his desire a few months back, and it so happened from a timing perspective, he was able to find something which was suiting his preferences at this time. So it's, I don't think we should read anything more than the fact that he had some personal reasons and he had to leave.
In terms of the challenges, if you can just elaborate, both from a company as well as an environment perspective.
I think the environment has a tremendous set of opportunities today where there's growth in the new areas. If you look at areas of data analytics, IoT, cloud, security, digital customer experience, AI, machine learning. So there are several elements of growth. The challenge for the environment is to make sure that the business is positioned in those growth areas. From an Infosys perspective, again, I need to spend time with our clients and our employees and then start to build our roadmap and come back with what that set of strategic priorities are.
Yeah. Coming to pricing that you asked, Chandra, Quarter to quarter, there'll be volatility, but a better indicator is really how has the pricing moved over the 9-month period as compared to the 9 months of previous year. If you look at that, in reported currency terms, the price realization has improved by 0.8%. In constant currency, it is flat. But the important point to note is, in the last 2 years, FY16 and 17, there was a pricing decline in constant currency terms of 1.5%, 1 to 1.5%. But this year, first 9 months, it has been flat, which is a good indicator in terms of stability.
Yeah, from a...
Yes. On the utilization, you're right. We have touched 84.9%. And of course, that is a very high level. And if you look at the beginning of the year, we gave the operating margin guidance of 23 to 25. And we had said that the rupee and our investments in US talent model is the reason 23 to 25. If you look at the first 9 months, we're at 24.2, pretty much at the midpoint. So I think while the utilization lever has helped us, but from now on, the headway is quite, short there. And of course, Ravi's delivery team have done a fantastic job breaking the peaks every quarter. So we have to look at the other levers. For example, on-site mix is one, which we have talked earlier. It used to be at 30.1%, and then last quarter it came down. This quarter again, it has come down to 29%. That is something that we are focusing on. Most importantly, if you look at the first 9 months of this year, the on-site employee cost as a percentage of revenue has also come down, which is primarily an account of managing our fixed price project profitability, role mix, and many other factors. But you're right. I think the headway, rather the runway that we have for utilization is quite limited.
Yeah. Coming to the sectors, this quarter, in quarter 3, the performance in financial services has been muted. Primarily 3 reasons. One is we had higher than expected furloughs. We had some budget cuts in a couple of our large clients. And thirdly, some of the transitions for some of the deals that we won in the last few quarters, the ramp-up was a bit on a slower side. But we remain very confident about this sector, and we believe that the calendar year 18 will be much better than calendar year 17 for the financial services. Our positioning in this is very strong. I talked about the 8 large deals, and out of which nearly 5 deals have from financial services. So we remain very optimistic about this sector. Insurance we have had a very strong performance in insurance on a constant currency basis. Sequentially, it grew about close to 8%. Retail has done well after several quarters, 3.2% growth on a constant currency basis, retail and CPG. While structurally we see challenges in retail and CPG, but we do expect that there are a lot of opportunities, particularly in the transformation areas, and given our differentiation and client base, we believe that we have a good opportunity to grow in retail and CPG going forward. Manufacturing has been a bit muted this quarter again because they typically have a much larger impact from a furlough perspective. We expect some of the growth to come back in the coming quarters. Consistent with what we have seen in the last few quarters, growth in ECS has been pretty solid, both on energy and utilities. Even this quarter, we have seen more than 5% constant currency growth. We continue to see good traction there. While we have had good growth on the telecom side, we expect the growth to be a little bit volatile going forward. Growth in energy has started picking up given the stability in oil prices and so on. So net-net, I think it has been a fairly broad-based growth, and we do expect some of the spending to come back in the coming year. And from a geography perspective, North America was marginally lower than the company from a growth perspective, 0.7% on a constant currency growth, but primarily impacted by higher furlough. Europe continues to be very strong. We have had close to 5% constant currency growth in Europe. And across the sectors, we see a lot more opportunities and pipeline in Europe as compared to North America. So overall, I think it's been, this quarter we have had a fair amount of consistent performance across sectors, and we do expect in the coming quarters some of the spend to come back.
Good evening, gentlemen. Happy New Year. I'm Sajid Mangat from Bloomberg Quint. Salil, you spoke about your review and 4 pillars of review which you're looking at: new markets, client operations, people, centric, and service portfolio. Can you elaborate a bit on all these four? What exactly will you be looking at when you review all these four pillars? And from the operations point of view, if you look at your earnings this quarter, you had a $225 million tax reversal which came in. Aside of that, you had a $31 million of other income, which was interest on the taxes which came in. So if you look at the earnings, excluding these two, the earnings or profitability was much lower than street expectation there. So if you can comment on that part of it. From a revenue point of view, how do you see revenues going into Q4? Are you confident enough that you will be able to meet the guidance of 5.5 to 6.5 in terms of constant currency? Banking and retail vertical, you said there is some, there is some slow growth coming in there. What I saw in your numbers was that Europe grew very good, but North America was a little muted. How much of banking was the reason there? And if that was a thing, how is banking as a character segment for Europe and US working? Because both are working on opposite directions, it seems, from the numbers which has come in. And finally, APA. I just wanted to check with you, there is some more money which will be coming into you as part of the reversal. Over how many quarters will it come in? Thank you.
Thanks. The question on the four pillars, I think there was a strategic refresh that was initiated by Nandan. So my intention is to really dig into it myself and confirm it. These pillars are traditional pillars around which our business is built. The market opportunity to understand where the market is, client relationships to build upon how our client activity is, and how to leverage that to produce more work in the new areas for our clients. The people dimension is the most critical because we have to be very clear on how our employee interactions are, how their reskilling is, and how our leadership development is. And the final dimension on the portfolio, the service offering, is again to look at how we rejuvenate that service offering vis-a-vis the market opportunities and the client needs. So those are the dimensions that we look at. They're already being looked at. It's more a question of making me dig into it deeper with the strategy refresh that Nandan had launched, and taking the time to get some feedback from our clients, our employees, and our partners, and build it with the leadership team. So that's the thinking around that. On the earnings, I'll request Ranga to answer that from the one-off versus the non-one-off.
Sure, thanks, Salil. Well, if you look at the profitability of the company, let's look at the operating margin, right? It improved sequentially. It improved to 24.3. Coming back to the net profit, the question that you had, yes, the APA resulted in the reversal of $225 million and the other income that you talked about. If you eliminate both the effect, if you look at the EPS growth or the 9 months over 9 months, EPS grew by 7% after normalizing for these. Quarter to quarter, yes, sequentially dropped, but that is primarily an account of, this time we had a payout of $2 billion, and there is the other income, the interest income. There was a minor dip there. But overall, if you look at the 9 month over 9 month, which is the sequential growth sometimes is they'll be volatile because of these pluses and minuses. A more reliable and more relevant is to look at over 9 months to over 9 months, how it has moved. There the EPS growth has been 7%, whereas the revenue growth has been 6.5%, so it is ahead.
How confident you are on achieving the 5.5 to 6.5?
I think we have retained our guidance to 5.5 to 6.5% in constant currency. And if you look at the first 9 months of the year in terms of constant currency, we have grown at 5.6%. So I think our focus is now on the execution of Q4, as Salil and Praveen said. So we have retained our guidance.
On the banking, as I mentioned earlier, in this quarter it was muted primarily, as I highlighted 3 reasons: higher than expected for low impact, budget cuts in couple of accounts, and slow ramp up of some of the deals that we had won in the previous quarter. From a Europe versus North America perspective, we see much better traction in Europe than North America. But our expectation is we will see, at least in this sector, we'll see that spend coming back in in the coming quarter and coming year. And we expect calendar year 18 to be better than calendar year 17 for this sector. Together for this, we expect spend to come back, at least on the discretionary side, we expect spend to come back even in Americas for the banking sector in the coming year. And on the retail front, we have had a good quarter after several quarters. We are hopeful that the momentum and the trend will continue. But this sector by nature is very volatile. So it remains to be seen. But we have had, I mean, for this quarter, we had a good one. So we are hopeful that that momentum will continue.
Do you see this differential homogeneity between BFS in Europe and BFS in North America? And why is that happening? No one is able to answer that question.
I mean, it's, see, for us, from a Europe perspective, I mean, you have to go back to look at the history, and it sometimes it's also a portfolio mix, right? So it really depends on that. I don't think it's, I mean, the situation is different from a geography perspective. It's a combination of the portfolio that you have and where you are in your own journey.
Hi, gentlemen. Kritika Saxena from CNBC TV 18. Wish you a very happy new year. Salil, congratulations. Good to see you at Infosys. My first question to you. You have talked about the 4 pillars, and I'm sure we'll get the specifics, so I'm not going to ask you about that. But I want to understand how critical will digital investments be? In my earlier interactions with you, you have spoken about the importance of consulting while you're looking at driving growth across the board. How critical will that be, and scaling up these areas will be as you go ahead? Praveen made a very important point that for BFS, 2018 will be better than 2017. Can we assume then that a lot of the pressure that was there, based on the macro environment, Salil, can we assume then that the pressure that the IT industry had seen in the year 2017 will be done, and 2018 will start in terms of the growth driver that we were expecting? So that's Salil. Hope you remember that. Ranga, as far as the guidance is concerned, you said that you've retained it. Will Q4 be better than Q3? And if it will you be able to come in at the higher level? Will you be able to beat the guidance? The other point I wanted to understand is the impact of the US tax reform. Have you started, of course, it's just been a few days, but by when are you expecting to start seeing some kind of a pickup as far as discretionary spending is concerned, and that thereby impacting in numbers? Praveen, as far as the kind of levers that you have in the India growth, the fact is that I agree that India is a smaller number, but it has declined substantially. ROW has declined substantially. Will that continue to remain a volatile factor over the next couple of quarters? And also, we just wanted to get your perspective on what levers you have to be able to, I agree utilization is at a substantial high, but what are the other levers that you have to be able to expand this? And Ranga, if you can just add to that point on the margin levers that you have right now.
Sure. Let me start with the digital and consulting point. Thank you, Kritika, and wish you a happy new year. From the way we are looking at our business today in terms of the market, clearly there's a huge shift in the market for that activity, for digital and also for consulting, because the buyers are not just the CIOs anymore, but there are a lot of business buyers. And with consulting, it gives you a tremendous advantage that you have linkage and access to those buyers. We have a strong business within consulting, a large business, and we have also a nice footprint on digital. So those will clearly be elements that go into this refresh that we're looking at.
And the other point on the demand environment, will 2018 be a better year overall for you than 2017?
That's a crystal ball question.
Yeah, at this stage, firstly, we want to get through our Q4, which is a critical quarter for us. As we come to the close of the Q4, we'll have made more clear plans for the next fiscal, and that'll be a better time to address that.
Yeah.